Hello everybody, how are you all doing out there? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips, location reports, all sorts of stuff. Stay tuned today for all your latest property news. Thinking of the Victorian market, what are some of the things that could trigger a recovery in Melbourne's property market? Melbourne's real estate sector has struggled, experiencing slower price growth compared to other Australian cities. A key challenge, of course, has been the weakening market sentiment, driven by economic factors such as rising interest rates, low consumer confidence, broader concerns about the cost of living. So to spark a recovery, several factors need to align, including economic improvement. The lower interest rates and better economic conditions, of course, would bolster buyer confidence, to state the obvious. Increased immigration. Melbourne's population growth, largely driven by migration, would positively impact demand for housing. That is happening. Infrastructure development. New and ongoing infrastructure projects could stimulate investment in the region, and government incentives. So policies supporting home ownership or property investment might boost market activity. Of course it would. These changes would likely need to occur before Melbourne's property market sees any kind of substantial recovery. And then we can consider whether Australia's regional property market is set for a rebound. It's a very generalised comment, of course. Some regions have not struggled at all. Following a surge during the COVID-19 pandemic, regional property markets, or some of them, experienced significant growth due to increased demand from city dwellers seeking that tree change, more affordable housing. However, recent years have seen a bit of a slowdown in demand, with factors such as interest rate hikes and the normalisation of the work from home arrangements contributing to the decline. Despite the challenges, there are indications that regional markets will see a resurgence. This potential recovery is tied to several factors, including ongoing population growth in regional areas, improved infrastructure projects that enhance connectivity, and more affordable housing compared, of course, to metropolitan areas. With urban affordability issues persisting, many home buyers will look and continue to look at regional areas as attractive alternatives. While some regions may recover faster than others, areas with strong local economies, lifestyle appeal and good infrastructure are more likely, of course, to lead the rebound. This suggests that regional property markets are poised for potential growth, though the pace and extent of that recovery, of course, will vary from region to region. And the once so popular trend of sea change, where Australians flocked to coastal and regional areas, is experiencing a reversal. Australians are now returning to urban living, driven by various factors leading to increases in city housing approvals. This may sound like it's contradicting what I've just said, but I'm talking about our bigger regional urban centres. This shift marks a significant change from the pandemic-induced migration to regional areas, which had driven a boom in regional property markets. Several key reasons contribute to this urban resurgence. And first, city living offers better access to jobs, education, healthcare, and cultural amenities. With many workplaces calling employees back to the office, the allure of living near employment hubs is much stronger. Additionally, city infrastructure and services such as public transport are superior, of course, in urban areas, making daily life much more convenient. Affordability is another factor. So while regional areas offered cheaper alternatives during the pandemic, rising prices in those regions, the bigger, strong regions, coupled with interest rate hikes, have made them less attractive. Many buyers are now looking back to the cities where diverse housing options are available, lifestyle advantages are plentiful. Furthermore, urban areas are increasingly designed to cater to modern preferences for walkability, sustainability, convenience, which of course appeals to a wide demographic, including young professionals and retirees. As Australians reevaluate their lifestyle choices post-pandemic, it's clear that the city's pull remains strong, leading many to abandon a sea change dream in favour of more convenient urban living. And finally, land values are soaring in Australia's smaller capital cities as demand continues to grow. The latest HIA CoreLogic residential land report says that values are growing rapidly in Adelaide, Brisbane and Perth. HIA senior economists say that the median price of a typical residential lot sold in the March quarter of 24 was $343,000, which is 3% higher than at the same time last year. Perth, Brisbane and Adelaide are currently sitting in the fast lane of growth in residential land prices with double-digit annual increases, they say. Hobart grew by 2.4% over the year. Sydney remained pretty flat while prices fell in Melbourne compared to the previous year. There are evidently two speeds of price growth in residential land market values, with the smaller, more affordable capital cities seeing the sharper increases in prices. Land values in the regions dropped by 0.9% during the same period. The number of lots sold is dropping and is down by 9% in the March quarter compared to the previous quarter at the end of 23. HIA say that this is part of the result of the inability of policymakers to bring sufficient land for residential development to market in a timely way. Excessive taxation and charges on land under residential development is a key reason for the high price of land. Land supply has been inadequate for the best part of a decade, and inefficient and inequitable taxes such as stamp duty have only compounded the problem and significantly inflated the cost of land, they say. As always, I will keep you posted on all things property around Australia as our year progresses. Don't forget to hit like and subscribe if you are enjoying the content. If not, it's okay. I will see you all again soon. Bye.